Hey, what is going on, guys? My name is Chris and welcome back to another video. Now, it does actually seem like ages since I've made a video, and it has been, if I'm honest. It's been a couple of weeks, and that's generally just life getting in the way and things come propping up, and yeah, just not having the time to sit down and just think about what kind of content I want to make and what kind of videos I want to make. But today I do have something I do want to get off my chest, something I want to talk about, and that is showing you on my Trading 212 portfolio as it stands today. So as we know, over the last couple of weeks, especially if you've been paying attention to the stock market, you're into the investing side of things, you watch other YouTubers, you will know that it has been a bloodbath. Yep, a very, very red market. And that's affected my portfolio, as I'm sure it has a lot of you watching this video. There's been a lot of red in the market, there's been a lot of fear in the market, and there's been people selling off because of that. And that, to be fair, in the first year of me investing, I started investing in March and everything was hunky-dory because it literally was a V-shaped recovery. I got in when there was an opportunity, and the stock market ever since then has just gone up and up and up and up and up. And if you've invested in Tesla or things like that, it's just gone like that constantly. And now, for the first time in my investing journey, we've had a bit of a pullback. We've had a bit of a red day, and people talking about this. Is this the bubbles bursting? Is this a correction? Is this another market crash? All that kind of stuff. But I thought it'd be really worthwhile me sharing with you my portfolio at the moment, showing you in all of its red glory and all the losses that I'm making at the moment, but also kind of tell you how I'm kind of approaching the market, some of the mistakes I've made over the last couple of weeks, and just really being honest and open and transparent with you, because at these kind of times, when there is red in the market, where people potentially are losing some money, you need some reassurance. You need to know that a lot of people are in the same boat. So that's what we're going to be talking about today. I'm going to be sharing with you my portfolio and the updates from my last portfolio video. The portfolio has changed a lot. I'm going to just be sharing with you some of the new stocks and some of the sales that I've had as well. But because this is going to be a very, very red video, I think there's only one way to start this. We need to make a coffee because we really need to sit down and get on with this. So let's go make a coffee first, proper Graham Stephan style. Cheers. Right, now that we've got the coffee out of the way, and that we're in our full Graham Stephan mode, let's jump into the portfolio. Let's go through it. Let's just show you in all of its glory. And the best way, and the way I like to do it, is just jumping straight into the app, and I will talk you through my portfolio. So if that's something you're ready for, let's get over there. Okay, so now that we're in the Trading 212 platform, we can see my portfolio in all of its glory, and it's not looking too pretty. Anytime you see a bit of red in your portfolio, it's never a pretty sight, is it? But it is what it is. Like I discussed at the very beginning of this video, there's been a wide market, correction, very regular red days at the moment. The stock market is bleeding for lots of various different reasons, and bond yields increasing and all this stuff kind of going on in the US as well. Is essentially meaning that we're seeing a red across lots of industries. But one particular industry that we're seeing a lot of red in is the tech sector. Now, as you can see as I scroll through my portfolio, we've got quite a bit of tech in here. So we're going to cover a lot of that. But the elephant in the room, and the one thing that I do want to cover, is this little dip here. Now, we can see that from a portfolio perspective, we were sitting around that sort of £6,300 invested, and then we saw a massive drop off and a dip. Well, that was because I got a bit emotional, and that's the first thing I want to cover before I go through all my different stocks, is that I want to scroll all the way down to a Workhorse. Now, Workhorse, if you have been an investor of Workhorse and you followed Workhorse for the last 6 or so months, essentially is an EV company that it works in the sort of the long mile delivery vehicle space, and was up for a contract with the USPS, I should say, and was one of the final people in that contract. There has been a lot of hype sort of built into the stock price, as you can see over the last sort of 3 months. Even beginning of February, we were hitting $40.
Essentially, basically, Biden's come into power and he's sort of said that he wants it to be all American. He's pushing EV. He wants electric vehicles to be, introduced into America. Anyway, that bruised the price up. Long story short, about a month ago, as you can see here, we can see from the price action, Monday the 22nd at 6 o'clock there, and you can see over the next couple of days that just drops. And actually, on that actual day, I don't think I could be able to show you it, we dropped significantly. And that's basically because Workhorse lost the contract. They weren't awarded any of the contract, and it actually went to Oshkosh in partnership with Ford. Anyway, there's lots of videos covering that. But long story short, they lost the contract. Now, the reason why you see this massive dip is obviously one, because of the price of the stock going down. But two, I sold out. I panicked and I sold probably about the day later. So we'd gone from sort of seeing about $32, $30 quite consistently. We'd hit those highs of 40, but slowly creeped down, but nothing fundamentally changed. Anyway, the announcement got made. I saw my portfolio go from being in a very healthy position. As you can see here, we're up £800 there, even more at one point, a good up 13%. And I sold. So, for me, that is a massive, sad thing to see, basically. But it is what it is, and there's not much I can do about it now. But, these things happen with Workhorse, but at the end of the day, I was emotional when I sold out, and I really shouldn't have. I basically saw a lot of YouTubers and a lot of people on StockWits and various different sources sort of being bearish and saying this is going to crash it, the stock's dead now, they've lost the contract, they were only in it for the contract. And in my portfolio, they were a large holding. I've got a portfolio of just over $7,000, and 1,000 of that was all to do with Workhorse. So a massive part of my holding, my portfolio. But anyway, I sold out, and that is why you can see that massive dip there in my portfolio. Do I regret selling? Yeah, kind of, I do. I kind of wish I held, but, at the same time, it is what it is. It's done now, I can't change it, and we have to move on. So that is what I've done, and I've basically reinvested the money. I took a bit of an L, took about £300 loss in the end, and I reinvested that into other areas of the portfolio. But just want to clear that up, and now I'm going to sort of rattle through a couple of these stocks really quickly so we can get through the portfolio. So a couple of stocks that are in the green, which is great at the moment. One of them is 3M, again, dividend yielding company, great stock. Haven't got a big holding there. But from a dividend perspective, is a nice sort of long-term hold. Price doesn't have too much fluctuations, pretty steady stock. But again, I only hold half a share, so it's not a massive holding in my portfolio. Accenture, again, another one where I've held this for quite a long time. We would have seen it in my other portfolio videos, and I kind of held that. Haven't really added to it. I got it a part of one of my pies, and a couple of 20 quid here, 30 quid here going into that one each month. So not quite a whole lot, but Accenture is a nice little hold. It's got a dividend as well. It's working with those sort of the finance sector as well, and bringing in sort of technology into those kind of sectors. So again, fairly substantial holding of mine, but again, only a couple of £100 really. Slightly up as well in the green. Next is Airbnb. Again, a lot of hype with Airbnb when it first came onto the stock market for its IPO. Again, but as you can see, even when it sort of joined its IPO and a lot of people saying it was expensive at the IPO price, you can see that it's steadily gone up. I bought this when it quote unquote dipped a little bit. I sort of bought it around here with that 189, maybe a little bit more. Actually, we can see our cost basis here of 192, so a little bit more than that. Anyway, it dipped some more and it kept dipping. But as you can see, after this sort of slight dip over the last week or so, it has rebounded quite nicely. Airbnb, again, I think, as the lockdown restrictions ease and people are able to go out more, I think Airbnb is a company that's going to thrive in the long term. And hence why I've now added it into my portfolio. Apple, don't really need to talk about this one too much. Again, been hit a little bit heavily recently with the tech movement into sort of value plays, but again, a long-term hold. Apple pays a decent dividend. It's a blue chip company. It's all the kind of things that I want in a stock. And it's my long-term hold. Again, it's I kind of think from a individual stock perspective, it's now my biggest holding with Apple there. Then moving down to Argo Blockchain. Basically, in short, this is a company that mines Bitcoin, and kind of basically, as long as Bitcoin keeps going up, which it has done over the last few years, Argo should see a good different price action. We're down a little bit. I mean, as you can see, it's a very volatile kind of price movement at the moment. It's quintessentially a penny stock, but it is on the London Stock Exchange, and is a company that I see potential in. And as Bitcoin grows and continues to go up in value, mining companies like Argo are going to benefit from that. AT&T, again, not much to say here. There's been a bit of price action recently in the last week as it's sort of been increasing over the tech changeover. But again, a bit of an easy to kind of hold long-term play, really. A stock that kind of has a decent dividend, is not very volatile, keeps its price pretty consistent, and again, a bit of a long-term hold. Churchill Capital, CCIV. So again, if you've been under a rock, you might have not heard, but Lucid Motors is going public. Well, is going through via a merger, which is Capital V, Churchill Capital IV, as you can see here. And obviously over the last couple of weeks, we've seen a definite decline, sort of aligned with the sort of market crash, or the adjustment, we should say, correction. And obviously you can see at the beginning of, the 22nd of February there, we were sitting at $61, so that's just over a month ago. And obviously that price has come down consistently. I did sell out and rebought a position, 5 shares, so I've sort of limited my shares there. And you can see we're sitting at an average price of about $30 there. Then we move down to Coca-Cola, again, long-term hold, nice and simple stock, but at the same time kind of is able to pay a nice little dividend. Not very volatile, not very sexy, but if Warren Buffett can invest in it and it works for him, then it works for me. Moving down to Etsy, again, an online marketplace, similar to Amazon, but kind of focuses more on hands and crafts and sort of smaller companies. Again, over the pandemic, over the last year or so, has seen significant growth. As you can see here, from April to now, you can see a massive growth here. Again, I see potential. It's a small little holding of mine. I've just opened a position in this recent correction into the market. And again, it is a company that is a marketplace that I think can evolve and keep growing. Again, I've got a small holding in Fiverr. Again, it's the sort of the freelancing app where you can kind of hire people to do projects for you, and there's a way from a freelancing perspective. And again, over the last sort of year, there's seen massive growth because of people working from home and looking for work, etc. Again, I mean, I've got £15. It's not going to break the bank. It's a very small holding, but it's a position that I'm going to continue to grow. Then moving down to Hyliion, again, a massive L at the moment in my portfolio. It's one that I've held for a long time. It's one where I bought in a lot where there was hype that everyone thinks it's going to be the next Nikola. Again, a company that fundamentally hasn't changed. I think the hype's just died out. People don't want to, mess around with it. People are kind of bored of this stock. But again, I think it's a company that long term, I think will pay off. I've just got to be patient. Again, as you can see there, it's my biggest loss in the sense of the 46% there. But again, I'm going to be holding it long and strong. I do believe in it, but I am definitely holding the bag with that one at the moment. Then we've got a couple of ETFs. So I've got the Global Clean Energy ETF here, which basically focuses on renewable energy, EV, electric vehicle, all that kind of good stuff. Again, I've opened a position there, only a couple of shares in there, but as the future kind of plays out that we need to move away from fossil fuels, we need to be clean energy, this is an ETF that I think will reflect that. So again, just opening a small position there. Then McDonald's, got 1 share in there. Again, over the last sort of couple of months has not been too great, but a bit of recovery over the last week or day or so, which is good. Again, nothing too glamorous here. Everyone knows what McDonald's is, but again, it's a company that I believe is going to be around for a very long time and has decent dividend yield as well. So part of my dividend focusing stocks. Same with Microsoft, small position, dividend focused, but again, will be around for as long as I can live, I imagine. So again, a position I will be adding to over time, but nothing glamorous, pays a decent dividend. Then moving down to PayPal, again, a really small position I've just opened. Again, I saw an opportunity with the kind of the correction in the market. PayPal is a stock that I do potentially believe in. A small position, as you can see over the last year, significant growth. And as you know, more transactions gone online, more people with side hustles, selling on eBay, all that kind of stuff. I do believe that this is a company that I could see me investing more in. Obviously, £11.62 at the moment. I could see me investing more long term. Pinterest, again, is a hold that I've had for a very long time. I've actually held this originally before I put it into my ISA about a year ago. So I came into this stock about the $12 mark. As you can see, that's pretty decent in sense of returns. I didn't have a big position when I first started investing, but if you look back on previous videos, I had to reopen a position using my ISA, so I could utilize my ISA allowance. But even so, still a really good stock, a company that I keep a good close eye on and has seen great growth over the last year because of people being at home. Again, Realty Income, basically a REIT that essentially pays a decent dividend, and a company that, a REIT that allows me to kind of have some sort of money into kind of real estate and see some kind of dividend growth from that. Roku, again, more to do with kind of the advertising and online video demand kind of site, like streaming. Again, people being at home, streaming, that kind of stuff. That was kind of the position there. Again, a really small position I've opened, but something I could potentially see me growing into. Then Segro, again, a bit of a dividend stock. Basically, they hold a load of real estate and develop sort of warehouses and property areas in the UK and sort of Europe and stuff. But essentially, I believe they hold a lot of the warehouse infrastructure for Amazon. And obviously, Amazon's massive in the sense of its growth and where it is at the moment. And so I see Segro being a good long-term play there. Shopify, again, hustle, people starting their own stores. You know, if Gymshark, one of the biggest brands out there at the moment, can be played by using Shopify, then Shopify for me is a stock that I do want to continue adding to. Definitely a tech stock, massive growth over the last year and obviously over the last couple of years as well. And as more people kind of work on side hustles, work from home, build their own businesses, I see that as a stock growing. Again, same as Spotify. I'd see a massive increase in the demand for podcasts and people, streaming podcasts and listening to music and stuff like that. And there's obviously a stock that's seen decent growth in the last year as well, like many. And again, a very, very, very small position that I've just opened just to kind of get a little bit of money in there, just so I have it in my portfolio. But again, a stock I can see myself investing more into. Again, then Square, another one that a year ago, again, most of these tech stocks have seen massive growth over the last year. Square basically, rivals Visa in lots of ways. Payment processing company. You've probably seen them if you go into the shop, your local coffee shop, and they pass you the card reader and you tap away on that. It might have been produced by Square. Again, another company that I do see growing over the next sort of 2 to 3 years as demand for that kind of stuff grows. Creating businesses and more people creating side hustles in their own business. So a position that I'm going to definitely be adding to. But as you can see, we've got a little bit of return as I've kind of added to this position through this recent correction in the market. Then Tesla, again, I don't have to explain too much in here. Tesla has had an insane year, obviously insane few years, kind of one of those trains that can't seem to be stopped. Other than obviously the last sort of month or so, we've seen a bit of a correction definitely within Tesla. As you can see, over the last year, we can see this dip here. So even at January, basically where I bought in a substantial holding. Luckily, my cost average isn't the best. Obviously, at 671, I did have a few shares. I bought in sort of lower down these regions, but I have bought at these all-time highs here around that 800 mark. I bought in, which it is what it is. There's been a bit of a correction. As we can see, we're rebounding slightly over the last sort of week or so, which is good to see. And again, Tesla for me, an EV company that's going to dominate the market, especially for the EV space. I think the technology they've got, again, can be used not just from cars, but from other companies as well. So yeah, Tesla. It's my third biggest holding as a singular stock. Trade Desk, again, small position I just opened here. More kind of advertising technology company, self-serve platform essentially that, for programmatic advertising online. Again, I sit within that space and sort of for the job that I do and understanding of the product is a little bit better than maybe some. Again, very, very small position, just opening that up there. Again, Twilio here, again, another tech company that's part of the Ark Invest sort of cloud communications platform. Again, it's a very small position here, but getting some exposure to kind of the companies that Ark invest into. Uber, again, we've seen a nice little rally over the last sort of week or two, basically because people are realizing lockdown's coming to an end and people can go out a bit more. Again, Uber doesn't need to be explained too much further than that. A holding that I've had for a very long time. Unilever in the UK is pretty well renowned. Unilever kind of holds like companies like P&G, like Head and Shoulders, for example, and various different home amenities and like shampoos and stuff like that. Over the last year, it has seen a bit of a decline, and that's generally because of the sort of the London Vanguard emerging markets. Again, focus on emerging markets, an index fund that kind of focuses on those. So, Eastern countries, China, those kind of places, and those kind of markets. Again, very small position, but something I'm going to definitely be adding to. Again, a lot of these companies that I've showed you, especially with the small positions, I've literally opened over the last kind of week or two, just alongside this correction. So, they're very small positions, but I'm definitely going to be adding to them. Then moving down to the Vanguard, obviously the biggest holding, as you can see here from an allocation perspective. I believe in diversification. I believe in sort of, long and strong and hold for a long time. And the S&P 500, although, isn't going to be crazy gains, I think I can feel comfortable with a 7% return year on year. And the Vanguard S&P 500 ETF at least gives me that. And I'm just ensuring that from a portfolio perspective, I learn my lessons, especially from like Workhorse, and ensuring that my portfolio isn't heavily, weighted to one particular stock or one sector. You could argue with Apple and Tesla and Pinterest, for example, that they are, but I believe that Vanguard gives me, some diversification in there. Then moving down to Walt Disney, again, don't need to really explain much here. Walt Disney is Walt Disney. It's been actually seen some particularly good growth over the last sort of 1 to 3 months. Again, from a revenue perspective, the company is in a very good position, especially with Disney Plus and the success of that. And I believe that's going to continue to grow. And they're obviously, even though they've cut their dividend, they're reinvesting into that space with sort of the Disney Plus and the online shows that they're doing and their own shows that they're going to be doing. I just see this Walt Disney really kind of pushing, even though they're not giving out a dividend at the moment, putting that money into the company to grow those kind of platforms. And again, once the parks can open and that revenue stream can kind of come back to life, I just see Disney kind of continuing to grow. Then moving on to Workhorse, I covered this a lot at the beginning, but I did open a new position. 3 shares, it's not a lot. Generally just so I knew that I had something in Workhorse. But again, nowhere near as many shares that I had before. And again, just over £30 in it, or £35. And then Zillow Group, again, another stock that, I'll be completely honest, I saw it part of the Ark Invest. I liked the understanding of the portfolio and what they were doing. Again, a small position of £17. I need to do a bit more research before I invest into this one even more. But it's part of the Ark Invest ETF that they've got going. So again, a company that I can see potential in after the kind of research I've done, but definitely one I'm going to be adding to. So there you have it. There's my portfolio at the moment. Very tech heavy as always. I'm trying to diversify as much as I can, but at the moment, I'm only really investing in companies that I understand, that I believe in, and tech does naturally fall into that. So there's my portfolio. Hopefully that has been insightful.
Okay, so there you have it. There is my portfolio update. There it is in all its glory, being in the red. Again, like I said right at the beginning of this video, we're all in the same boat. We're all seeing a bit of a dent in the portfolio and loss of some gains. But I think what I can tell, even over the last sort of few weeks, part of this correction, at one point I was down sort of 15%, nearly £1,000, I think. And now that's rebounded to just under £200, just over £200, I should say. What I'm trying to get at is that essentially the market will rebound over time, that if we look at it on a daily scale or weekly, then yeah, it will be down and it will look bad. But if we look at it over a year or 6 months even, 9 times out of 10, we're going to be okay. There are some stocks that are going to take some long times to recover, but even if you look at some of the airlines and you know, the cruise line stocks as well, they're seeing some rebound, that they're going back to kind of some of the better days before all this pandemic stuff. So, you know, fundamentally, if the fundamentals are right and it's companies you believe in, the stock market, however kind of volatile it can be and up and down it can be, over a long period of time, the companies will grow. And that's the main thing to hold on to, long and strong, not timing the market, all that kind of good stuff is key. And that's what I'm trying to remind myself. I'm trying not to be emotional. I'm trying to learn from my workhorse mistake. And I'm trying to just invest in companies I believe in, do my research, understand the fundamentals, and just leave it and invest and keep adding to it monthly if I can. So, you know, you're not alone. A lot of people are in a similar position. Leave your comments down below telling me about how your portfolio is looking at the moment. I'm intrigued and really keen to know what your portfolio is looking like at the moment. Again, any suggestions on any stocks I should be looking at, or any, you know, questions about my portfolio, let them be known and leave them down below in the comment section. But apart from that, guys, that's about it for today's video. As always, leave a like, leave a comment, and subscribe if you're new. But until next time, I'll see you guys later.